The corporate cage of traditional e-wallets. For decades, we've been forced to live in the corporate financial cage. Your fancy e-wallet, while convenient, is shackled to the rules of centralized finance. Let's be clear about the limitations Pi is trying to obliterate. 1. The exclusion zone. Traditional systems rely on established banking infrastructure and rigid regulatory frameworks. This automatically excludes billions of people in underserved regions who lack access to basic bank accounts. Pi Network sees this as a global injustice. 2. The fee trap. Every time you transact, especially across borders, you are hit with high transaction fees and settlement delays. These fees extract enormous value from users and disproportionately hurt small merchants. 3. The control problem. These platforms are centralized. They can freeze your funds, censor your transactions, and control your data. There is no transparency and minimal user control. The genius of Pi's strategy is that they recognized that to truly build a universal digital economy, they couldn't just create a new app. They had to build a new financial rail altogether. Pi's radical alternative: contribution and autonomy. Pi Network's model is the antithesis of the corporate cage. It's a community-powered economy built on two fundamental pillars: accessibility and decentralization. First, accessibility. By enabling contribution-based mining through a smartphone, Pi sidesteps the need for expensive hardware or complex technical expertise. This instantly transforms the platform into an inclusive gateway for global financial participation. It is intentionally designed to onboard the unbanked and underserved. Second, decentralization as design principle. This is the core weapon. Unlike centralized e-wallets that hoard data and authority, Pi distributes control across its massive global pioneer base. This gives us three critical benefits. No single point of failure. The network is more secure and resilient against attacks or corporate shutdowns. Protection from censorship. No single entity can stop transactions or dictate who can participate. Web3 autonomy. It aligns with the true philosophical commitment of Web3, that you own your assets and your identity. His structure democratizes not just access to money, but access to economic power. Pi is not stopping at just being a currency. To truly displace centralized systems, they are building a complete self-sustaining digital economy infrastructure. This isn't just theory, it's tangible architecture. The Pi wallet for secure asset management, the Pi browser for accessing decentralized apps, and the smart contract layers for automation and scalability. They are building a digital town square complete with its own verified identity system, the .pi domains. But infrastructure is useless without utility. That's why merchant integration is a non-negotiable strategic pillar. Merchants who adopt Pi gain access to a growing base of verified, engaged users and are liberated from the high fees and settlement delays of traditional payment systems. This is where the whole thing becomes a self-fulfilling prophecy of real-world utility. If you've ever felt frustrated by high bank fees or the lack of control over your own digital assets, then this vision resonates with you. This is why Pi is so revolutionary. If I've convinced you that this is more than just a mining app, that this is a strategic move to disrupt global finance, do me a huge favor. Hit that like button now to help get this crucial information out. And if you want continuous updates on the crypto projects challenging the status quo, make sure you subscribe to TJ Crypto World and tap that notification bell. The strategic implications and governance. The most important long-term strategic difference, however, lies in governance. In traditional finance, corporate boards and CEOs dictate policy. On Pi Network, the community is empowered to shape the ecosystem through transparent proposals and voting mechanisms. This is critical. A decentralized economy cannot be led by a centralized company forever. The governance model ensures that Pi evolves based on the needs and values of the pioneers, the actual users and contributors. This participatory model ensures continuous improvement and prevents the network from ever becoming what it is trying to replace, a system controlled by a select few. What does this strategic departure mean for the future? If Pi is successful, the implications are transformative. A massive reduction in financial exclusion. The emergence of new business models based on contribution. not speculation, and a definitive shift of economic power from institutions back to individuals. Pi Network is positioning itself not just as a participant in Web3, but as a leader in ethical and inclusive digital finance. The core message is this: Pi Network is taking the long road because the short road leads right back to the corporate cage. By prioritizing decentralization, accessibility, and utility, they are building a financial paradigm that can truly serve a global, connected world. For pioneers, the opportunity is clear: participate, build, and lead in this new system. Thank you for tuning in to this deep dive. I appreciate your time and commitment to understanding the complexities of this ecosystem. I recently covered the latest news regarding Pi's mainnet migration and KYC updates. If you want to know how close we are to seeing this vision fully realized, keep building, pioneers. I'll see you in the next video.